In 2019, Netflix told the world it had made a profit of $1.87 billion. In the same year, in the same filing, the same company reported that its operations had consumed $2.89 billion in cash. Not a loss. Cash. Gone. Both numbers were audited. Both were correct. And they were not a contradiction. This is the story of how a company can be genuinely profitable and genuinely running out of money at the same time. And why, for 5 straight years, Netflix was exactly that. The easy explanation would be that Netflix was quietly losing money and dressing it up. That is not what happened. Take the 5 years from 2015 to 2019. Netflix reported a profit in every single one of them. Revenue tripled from $6.8 billion to $20.2 billion. The company was growing, and it was profitable. And across those same 5 years, its operations burned through $9.5 billion in cash.
To understand why, you need to know what a television show is, to an accountant. When Netflix spends $300 million making a series, that money leaves the building immediately. Writers, actors, crews, locations, sets, all paid now. But the show itself isn't gone. It sits on the platform for years, earning subscriptions the entire time. So the rules say it isn't a cost, it's an asset. And you don't expense an asset all at once. You spread it across the years it earns in, which opens a very strange gap. In 2019, Netflix's cash flow statement shows $13.92 billion paid out for content. The expense recognized on the profit statement that same year was $9.22 billion. The difference, $4.7 billion, was real money that genuinely left the company and simply wasn't in that year's profit. It wasn't hidden. It was printed on the next page.
Do that every year and the gap compounds. In 2018, the difference was $5.5 billion. In 2017, $3.6 billion. Across the 5 years to 2019, Netflix reported $3.95 billion of profit, while its operations ran $9.5 billion behind in cash, a gap of $13.5 billion between the two stories. The profit was real. The hole was also real. So where did the money actually come from? It borrowed it. At the end of 2014, Netflix carried under $900 million of long-term debt. By the end of 2019, it carried $14.76 billion. Netflix was funding the shows you were watching with borrowed money, and saying so in public filings every single quarter.
Now the part that matters. None of this is a trick. Capitalizing content isn't a loophole Netflix found. It's what the accounting rules require, and it's how film studios have worked for a century. A show genuinely does earn for years, so charging the whole cost to 1 year would be the distortion, not the other way around. And Netflix printed the cash numbers and the profit numbers side by side in the same document every quarter. Nobody was hiding anything. What it was a bet. Netflix was borrowing against subscribers it did not have yet. If growth had stalled, if people had stopped signing up before the shows paid for themselves, the debt would still have been there, and the revenue would not. Plenty of companies have made exactly that bet and been destroyed by it. This one could have gone the other way.
It didn't. Last year, Netflix reported revenue of $45.18 billion and a profit of $10.98 billion. And the number that actually matters? $10.15 billion of cash generated by operations. Profit and cash finally telling the same story. That content gap, $4.7 billion back in 2019, is now $670 million. And the debt has fallen every year since 2020. So how does Netflix make billions? Slowly and then all at once. By spending money years before it was allowed to call that money a cost and surviving the wait. But the useful part isn't about Netflix. It's that profit and cash are two different questions.
A company can be profitable and broke. It can be losing money and flush with it. If you only ever read one of those two numbers, you are reading half a company.